My name, for those of you who don't know me, is John Bose, and I'm a freelance affiliate marketer. I have over half a decade of experience in this field. I've developed sales team of more than 120,000 partners. We've generated combined sales of more than several million dollars in previous companies, but in my current company, I've sold up to $358,835 with Skyward Community, attracting investors into Unitsky string technology. I happen to be a three-time Network Marketing Car Award winner, and I teach busy professionals how to make money online, leveraging on Skyward Community and Unitsky string technology. More recently, I also talk about the strict decentralized cryptocurrency staking project. So these are the opportunities that I promote. In tonight's meeting, what I'm going to be doing for you is I'll be teaching you three lessons. The first is a lesson on investment. The second is a lesson on shares and dividends and how you can make money from shares, specifically by investing in the pre-IPO shares of Unitsky String Technology, leveraging the Skyward Community crowdfunding platform. Lastly, ladies and gentlemen, we will talk about Unitsky String Technology and Skyward Community, and I will lay particular emphasis on how you can become a co-owner of this technology with and without making direct investment. So this will be the layout of tonight's meeting, and I'm excited to get started. But before I get started, I just want to acknowledge the presence of the persons in the room. I see currently we have Mr. Godwin Bako, Mr. Michael Anthony Abohai. You're welcome, sir. We have Mr. Oyinloye, we have Miss Patricia, and we also have, of course, we have myself. All right, so this meeting will be recorded for those who are not here with us so that they can also participate from the recorded version and share with their prospects and their partners, those who for some reason could not be with us tonight. Give me a minute. All right, just trying to get some things in order before I proceed. So, very important, the content of tonight's presentation is for educational purpose only. Note that we are not here to promote investment in any platform. We are here to educate and enlighten people on what we do, what is working for us and our team. So if you have to make any investment decision, do your own research, check with your financial advisor before you make any financial decision. Now, we'll be starting with a video on investment. So that video is about 1 minute in length. We're just going to see it together and then take out some key learning points from that video.
An investment is an asset purchased with the expectation that it will generate income or appreciate over time. In finance, common investments include stocks, bonds, real estate, mutual funds, and to a lesser extent, commodities, annuities, and options. Many investments trade daily on the public market. Current events and company performance can cause a company's stock to rise or fall, and significant news can affect the entire stock market. Generally speaking, if a person follows safe investment practices, the longer they invest for, the greater the chance they will grow their wealth. Inversely, the shorter the period of investment, the higher the risk of that investment losing money. But with all investments, there is always some risk that the value of the asset will decline rather than increase. Despite the risk, wise investments are one of the best ways to grow your money. Let's say two brothers each inherit $100,000. Hubert does not invest his money, choosing instead to hold it in a checking account that earns no interest. Ivan, on the other hand, invests his money in some broadly diversified mutual funds. Every day, Ivan's investments change in value. Over 10 years, Ivan's average investment growth was about 7.2% per year, meaning his total investment grows to about $200,000. His brother Hubert, however, would still only have $100,000 in his savings account. zero interest. Ivan, on the other hand, invests his money in some broadly diversified mutual funds. Every day, Ivan's investments change in value. Over 10 years, Ivan's average investment growth was about 7.2% per year, meaning his total investment grows to about $200,000. His brother Hubert, however, would still only have $100,000 in his savings account.
All right, now we've just seen a short video on investment, and I'd like to draw out some key learning points from that video. Learning point number one is that an investment helps your asset to appreciate value over time. Value over time. So please note, an investment is not a get-rich-quick scheme whereby you put your money and then in the next 1 month you are getting a massive return. It takes time for an investment to give you the maximum value. So the longer the period of your investment, the greater the value of your asset. And conversely, the shorter the period of your investment, the higher the risk of that investment losing money. Now, every investment has its risk. However, wise investments are still one of the best ways to grow your money. If you have money invested, every single day, week, month, there is an appreciation of value, which is why investing in low risk and stable rewards opportunity is one of the ways to appreciate massive value over time. But looking for high risk investments, ROI schemes, Ponzi schemes can actually help you lose money quickly. So when you are investing, you want to manage your emotions. You want to manage your emotions such as your fear and your greed. You also want to diversify your investment to reduce the overall risk. But note that doing this may also impact on the returns you get in your investments. Now, one of the kind of investments that we see people do is investing in shares and buying company shares. Now, what are shares? They are units of ownership in a company or a financial asset. And investors who hold shares are called shareholders. Now, for some companies, these shares exist as a financial asset providing for equitable distribution of any declared residual profit in the form of dividends. However, there are shareholders of stocks that do not pay any kind of dividends, and these shareholders only participate in profit from price appreciation of the shares in the stock exchange market. We're going to see a video that puts all this in clear perspective, and that video is about 2 minutes long, so I'm just going to play the video while we watch.
A share is a single unit of ownership in a company or financial asset. It is essentially an exchangeable piece of value of a company or asset which can fluctuate up or down depending on several market factors. You can think of a share as a slice of the financial cake. Shares are also known as stocks. A company divides its value into shares as a means of raising capital. Issued 1,000 shares. If 100 of those shares belong to you, then you own 10% of that company. People who own shares in a company are called shareholders or stockholders. Shareholders receive income from the shares they own on a routine basis. These are called dividend payments. A public company sells its shares on the stock exchange. Public company shares are open to the public, hence the name. A private company, on the other hand, sells its shares by private arrangement. If you want private company and persuade its shareholders to sell to you.
A dividend is a payment shareholders receive from a company's earnings. When a company is profitable, management can choose to reinvest profits to help grow the business or distribute those profits to shareholders in the form of dividends. Dividends come in several forms, but the most common is cash, which is deposited into shareholders' investment accounts. For example, if a company declares a 30-cent dividend and you own 100 shares, you'll receive $30. Typically, mature companies with strong cash flows are more likely to pay dividends. Many investors seek the income associated with dividends and often view them as a sign of strength and positive expectations for future earnings. Companies often pay dividends quarterly. However, some pay semi-annually or annually. Keep in mind, companies aren't obligated to pay a dividend and can reduce or stop paying it at any time. Some investors specifically seek out and invest in dividend-paying stocks. Dividend stocks can provide income and potentially enhance a portfolio's overall returns. Since 1926, the U.S. economy has undergone many bull and bear market cycles. However, the income return received from dividends has been relatively consistent during this time period. In addition to potentially higher yield, many investors look for consistent and growing dividends over time as an indication of company health and likelihood of. Dividends aren't guaranteed. Companies that pay unusually high dividends may not be able to sustain them, and if dividends are cut, it might send the stock price tumbling. Despite these risks, dividend-paying stocks tend to provide income while still allowing for the appreciation.
I apologize for the and their service is a little bit poor. I apologize for the network glitches. I see that the video was poorly rendered. There were some glitches, and I can also see that the network is a little bit poor. Well, sadly, I don't have a different option because the alternative Airtel does not even have any single signal in my area. I would have switched to a different network because I can see that this network is a little bit glitchy. So I apologize that parts of that video did not play. But let's continue. Now, like I said, or like we saw in that video, there are different kinds of shares. Now we have dividend paying and non-dividend paying shares. So dividend shares are those ones that allow the shareholders to profit from the company's profit sharing and also from stock price appreciation. That is, you can actually get profit from the company's declared annual or quarterly or semi-annual profits, or when the share price in the stock market appreciates, you can sell your shares and still get profit from share price appreciation. Then we have non-dividend shares that do not declare dividends. Rather, you just profit from share price appreciation. That's if you buy the shares when the prices are low, you sell when they are high. That profit is called share price appreciation. But for the company to be paying you every single month, or every single quarter or every single year, that doesn't exist when those shares are non-dividend shares. We equally have shares in categorization according to the stage of the company's development in which they are bought and sold. And in this categorization, we have three kinds of shares. We have pre-IPO shares, we have IPO shares, and we have post-IPO shares. So pre-IPO shares are those shares that are sold by companies to raise capital before their initial public offering. These shares are sold before initial public offering, IPO. So that's why they have the name pre-IPO shares. Now, it means that companies selling pre-IPO shares are private companies. Please note, private companies sell pre-IPO shares. Any company that is already public means they have already done their initial public offering. They are now publicly traded in the stock exchange market. But any point before the initial public offering, a private company can still sell its shares, but those shares are known as pre-IPO shares. Now, companies that sell pre-IPO shares do so to raise capital for their development. Now, this is a risky investment to make because it is a venture capital project. You are investing in the development of a company. And to compensate you for taking this risk, the company will give you what they call an investment premium, which is a high discount on the price of their shares. So it's to compensate you for the risk you are taking. They give you an investment risk premium. The risk you are taking is if this company does not develop up to the point of IPO, you will have lost the money you invested. But if this company develops up to the point of IPO, ladies and gentlemen, the money that you bought the shares before IPO will be way less than the price at IPO. So if you sell your shares at IPO, you could be making a massive, massive profit. We are going to see an illustration in the course of this presentation of what investing in pre-IPO can actually do for you financially. We equally have IPO shares, and these are sold on the date of initial public offering of a company shares on the stock market. Now, when a company is granted entry into the stock exchange market, the pre-IPO shareholders can then sell either all or part of their shares on the stock market for a higher price, or they can wait for the price to increase for It's important to note that buying a company shares at the IPO stage is a lot more expensive than if you buy at the pre-IPO stage. So if you are aware of the existence of a good company selling pre-IPO shares and you are waiting till they go public before you buy, you may just end up buying those shares for a lot more money than you would have bought them when they were a private company selling their pre-IPO shares. Also worthy of note is that if you bought dividend shares, that's the ones that provide income from the company's profit. They pay you dividends on a routine basis. You may not wish to sell your shares because those shares give you the right to receive a proportional share of the company's profit whenever they are declared. So if you own dividend shares, it may not be a smart thing to sell them off at IPO, because it's like you have a house and then you can actually get rent on that house. But then you decide to sell the house off because maybe you want a one-off paycheck. Somebody just pays you and collects the house. You get a huge amount of money all at once. But note that the person who is now the new owner of the house will be the owner that collects the rent, no longer you. So this is why selling dividend shares may not be a smart thing to do as an investor. Now, post-IPO shares are the next categorization of shares according to when they are sold in the company's development trajectory. Now, post-IPO shares are sold after the initial public listing of a company's shares on the stock market. The price of a post-IPO share is affected by various factors such as the company's performance, market demand and supply, current events, significant news, etc. Now, all these variables affect the price of the shares of a company. Now, I can give you an example of the COVID pandemic, which reduced the demand for airline transportation due to all the travel restrictions and the social distancing. So it led to a reduction in the airline's company share price or value in the stock market. At the same time, the demand for things like video conferencing, things like Zoom, Telegram, Google Meet, those ones increased because a lot of people had to resort to working from home. Now, that led to an increase in the demand for video conferencing software companies, and their share price significantly increased during this time period, while the share price of airline companies reduced. So the same news, the COVID pandemic, affected the entire stock market, but it had different impacts on different businesses. We had some businesses that actually made more money and became more valuable during that time, and other companies became less valuable. So note that in the stock exchange market, different factors can affect the price of a company shares, including company's performance, market demand and supply, current events like the COVID pandemic, significant news, etc. Now we're going to look at an illustration of the three types of shares we just talked about using an actual company. So we'll be using Zoom Communications to illustrate. And I'm just going to open up this news here, where you're going to see that when Zoom was private, before they went public, they actually sold their shares, and they sold them for less than 30 cents per share. So we're going to see that very shortly when I open up this web page here. The network is a little slow, so you're just going to have to be patient with me. All right, it's opening up. And here we are. Okay. So, in this news article, I don't know, can you see it on my screen, or is it still loading up? If you can see this, kindly let me know. Can I get a feedback? If you can see this, let me know.
I can.
Thank you so much. All right, so this news article shows us that the the former governor of Anambra State, Peter Obi, revealed how he lost out on an opportunity to invest in Zoom Communication when they were still a private company. He said that that investment was less than 30 cents and it was an opportunity he should have seized with both hands. I hope you can see where I highlighted. Now, this was the period of 2015. He said that in 2015, he met people where he went to do a program who told him about Zoom business and told him to invest. At that time, it was less than 30 cents. The reason why I brought you here was to show you that the price of Zoom shares as at 2015 were sold for less than 30 cents per share. Now, it will interest you to note that when Zoom went public on the 18th of April 2019, their price was $62 per share. That means anybody who bought Zoom share pre-IPO would have been selling at IPO just about 4 years later and making a whooping $61.7 as profit for each share they sell. So something you bought for 30 cents, you will sell for $62 at initial public offering. So I mean, that's massive profit. Ladies and gentlemen, that's a 20,666% price increase against the pre-IPO price. So that's a whole lot of money. That's not even the good part. The sweet part is that just a year later, precisely on the 16th of October 2020, during the COVID pandemic, Zoom shares, due to the high demand of Zoom communication, Zoom shares were selling for $559 per share. $559. So compared to the price at IPO, that's $62 at IPO, this represented another 902% price increase against the IPO price. I don't want to just tell you this, I want to show it to you so that you can appreciate just how amazing investing in a pre-IPO company can be. So what we have here in front of us, ladies and gentlemen, is the price chart of Zoom video communications. And if you look closely at the chart, I'm going to open it up to max. So you can see from, okay, today the price of Zoom is $76.11. Yeah. But if you go to when they were listed, I've moused over to when they were listed. I don't know if I can zoom into this. Okay, yes, I can. So the price of Zoom shares when they were listed on the 18th of April 2019, ladies and gentlemen, was $62 per share. Yeah. Now let's go to their price point as at when the COVID pandemic hit. That's on the 16th of October 2020. You can see these same shares sold for $559. Now we've seen this. Let us go back and make a little bit of an estimate on the basis of this information that we have. You see, if Peter Obi in 2015 had invested or bought Zoom shares at that price of 30 cents per share, oh, I've gone too far back. Sorry about that. This is where we are. Okay. So I hope you can see my screen clearly. I'm trying to zoom in, but then, okay, I think, yes. Right. So if Peter Obi had invested in Zoom shares as at this 2015, right, he would have bought with 500,000 naira. 500,000 naira as at that 2015 dollar was about 198 naira per dollar. So $500,000 would have been 2,525. 500,000 naira would be $2,525. Yeah. And $2,525 would have bought 8,417 Zoom shares at that price of 30 cents per share. Follow me closely. Now, if Peter Obi had done this and bought 8,417 Zoom shares when we hit COVID pandemic 5 years, and Zoom shares sold for $559 per share, these shares, that's 8,417 shares, would have been worth $4,705,103. And the good news that dollar appreciated to 380 naira per dollar in 2020. So that 4.7 million share, $4.7 million price of those 8,417 shares would then be worth 1.7 billion in naira. That's precisely 1,787,939,140 naira. Take out your calculator and punch in this thing by yourself. Don't just take it that, okay, the slide is up here, so we are seeing it. Go and calculate. I mean, you saw the figures. You saw how much the shares were when they were sold as a private company. You saw how much the shares became just 5 years later after listing in the stock market. You can see obviously here that the same thing that sold for 30 cents later sold for $559. What that means is that if Peter Obi invested 500,000 in 2015, as at 2020, that 500,000 would have become 1,787,939,140 naira. And please note, this does not even include the money that he would have been getting as dividends from Zoom, because Zoom, their shares are dividend paying shares. And I'm going to show you that in the next slide. I hope you're following closely. Let me have a feedback, please.
I am.
Can I get a feedback?
Yes, I
Are we there?
am.
Thank you so much. But you're the only one responding. Does that mean the rest people are not following? We have Mr. Godwin, Mr. Oyinloye. We have Mr. Joshua. I hope you're all with me.
We are with you.
Thank you so much, sir. Thank you. Thank you for that feedback. All right.
Yes.
So, like I said, what we just calculated is only on the basis of price appreciation. We haven't even talked about dividends. Now we're going to look at dividends from Zoom. So I'm going to go back to that web page. Now I'm going to show you Zoom financials. Let us look at their financials. Can you see the Okay, so we are here now, Zoom financials. And if you look at Zoom financials, you would note that they've been declaring EPS over the period of their operation. Just loading. All right, now we have the figure here. Now, if you look at the chart, you will see that in 2022, okay, this is quarterly financials. Let me just open annual so that we can see the entire thing over the course of 1 year. Okay, I'm trying to find the option for selecting annual rather than quarterly. All right, let me try something else. Let me open this site instead. The network is a bit awful, and I don't really know what to do to improve the network connectivity. I'm having some network challenges and it's affecting my video, but let's see. Okay, just give me a minute. I have to close the slide and reopen it. I'll be just a minute. I can hear someone in the chat room. Please, if it's you, kindly mute your speaker. Okay, it seems we're back. All right. Forgive me for that break in transmission. My network actually kicked me out briefly, but I'm back. All right. Okay. Let me just share my screen again and pull up the slides. Forgive me for that little delay, for that network glitch. All right, my screen is back up, and I hope you can see this was exactly where we stopped. So can you see my screen, please? Let me get a feedback if you can see my screen.
I can.
Thank you so much.
Yes, I can see it.
Thank you so much. Okay. Now, like I was saying,
I can see
Zoom.
it.
Thank you. Thank you so much. Thank you for that feedback. Now, so like I was saying, let me just move up to where we stopped. All right. Great. So, Zoom financials over the period of their business operations, they've been declaring their EPS on both quarterly and annual basis. So I'm going to show you the data for the annual EPS that Zoom declared for some years back. Now let's look at this chart. First off, you can see here that it says Zoom Video Communications Inc. reported a revenue of 4.1 billion for FY 2022. So FY is fiscal year 2022. And that represented a growth of 54.63% compared to their 2021 fiscal year. Now, this doesn't concern you. The income statement is not our concern. The balance sheet is not our concern. The cash flow is not our concern. What we are concerned about as shareholders is what is the earning that each shareholder received from this profit that was declared. You see, according to the calculation of dividends, after the company has made its profit, there's a percentage that goes into the payment of dividends. That amount of money divided by the number of shares they've sold is what gives you the earning per share, otherwise called the EPS. So for that fiscal year 2022, they declared an EPS of 4.6. Oh, nice. That thing just moved. Okay, but look at it here. They reported earning per share of 4.6. I highlighted that so that you can see it clearly. So that means that for every share you own in Zoom, they would have paid you $4.06 for the year 2022. Now imagine we use the example of Peter Obi investing $500,000 in Zoom as at 2015. You know that investment would have earned him, from dividends alone, would have earned him some 4.6 times 8,417. If we do the math, that's around $36,000. Around $36,000. Let's just be sure. So I'm going to have to pull up my calculator here so that we can be sure. Okay, so let me open it up and let us just run the numbers. So 8,417 shares that Peter Obi would have bought if he had invested $500,000 in Zoom as at 2015, multiplied by $4.06 would give $38,718.2. And remember that as at 2022, I think a dollar was selling for. Let me just check. Let me be sure. So naira to dollar in the year 2022. Let's see what that tells us. Okay, so that was 460. Okay, this is a little bit confusing. Let me check naira to dollar, dollar to naira, because that result is not very clear. Okay, so it says 460.5. So therefore, it means that this, to convert this back to naira, would have to multiply by 460.5. And let's see what that gives us. Okay, so that would have been 17.8 million naira. So for the year 2022, the dividends Peter Obi would have gotten from his 8,417 shares would have been 17.8 million naira. So I believe that this shows you conclusively that investing in shares, right, is one of the ways to grow your income significantly. Yes. So finding a good pre-IPO company to invest in and investing in their development, getting some of their shares, will actually be a very smart thing to do for a wise investor today. So ladies and gentlemen, if you see a good company selling pre-IPO shares, you would really want to consider getting involved and investing in their development. Now, how do companies raise capital to develop? The first thing is that they go to the banks to take loans. Otherwise, they sell their shares to high net worth individuals. Otherwise, they sell their shares through crowdfunding platforms to members of the public. That is for private companies. Then for public companies that have already listed their shares in the stock market, they offer their shares for sale, and people can just buy these shares on the stock exchange market, and the company gets capital for its development. Now, we've talked about shares, we've talked about investments. Now we're going to be talking about Unitsky string technology and Skyward community. But before we start that, we're going to look at a video. It's a very short video. So I'm just going to play it and then we'll run.
On the world's roads, every year 1.5 million people die. More than 10 million become disabled. Roads impact 20% of the Earth's surface, which is taken away from nature and excluded from agricultural turnover. The existing transport causes environmental damage of 2.5 trillion euros per year. If we do not look for new solutions, the situation in the world will only get worse. Transport must change, become more efficient, safer, and friendlier to the environment. The Skyway Transport is a sturdy and lightweight pre-stressed overpass along which special electric vehicles of various configurations and capacities run at high speeds. The traffic is carried out on rails raising the road above the ground that are the central element of the overpass. The string track structure is integral. Even if several supports are damaged, it will not paralyze the traffic, as pre-stressed string rails will only bend without breaking. In combination with multi-element rail design, it provides multiple safety reserve. The small cross-sectional area of the main elements greatly diminishes the danger posed by hurricanes and tsunamis, floods, snow and sand drifts, which remain below the traffic level, thus rendering the track resistant to natural disasters. The Skyway track structure complies with international safety standards. The rolling stock is equipped with anti-derailment and backup brake systems. The modules are driven by 4 or more motor wheels, each of which can operate independently so that even if most of the drives fail, the traffic will continue. Duplication of critically important functions and systems is one of the basic principles of Skyway safety concept. Fully automated intelligent control system excludes human factor, which is the cause of the majority of traffic incidents. The intelligent system features real-time information analysis. It is capable of adjusting the movement if an obstacle is detected, controlling the passenger's behavior in the cabin. No matter what is the weather or the time of the day, the system allows driving safely in poor visibility. With the possibility of operating around the clock, the system collects the data on the state of the model and the environment, controlling the process of pickup, drop-off, and traffic intervals. But it is impossible to take into account everything. And therefore, in such cases of emergency, in addition to the intelligent system responsible for centralized safety measures, each Skyway vehicle is also equipped with a number of autonomous emergency devices. These include an automatically coupled emergency towing device, with which a vehicle moving behind or in front can tow a failed vehicle in order to deliver it to the nearest station. Fire extinguishers in the passenger compartment, duplex voice and video communication with the dispatcher. In extreme cases, passengers can be evacuated from the cabin via an emergency exit with the help of a simple and reliable mechanism for evacuation. Designed to achieve maximum safety and efficiency with minimum energy cost, Skyway systems have the lowest level of environmental impact to date, operating on clean electricity, demanding minimum land acquisition, and allowing housing construction and agricultural cultivation under the track structure.
All right, so we're back. I can honestly tell you that this is one of the best systems for transportation ever developed. And this company is using crowdfunding as the way to raise capital to develop their technology up to the initial public offering. So this gives you the opportunity to invest and become a co-owner. And when you invest, this is what you could be looking at, right? You could be looking at getting these kinds of returns on the packages available for investment. I hope you can see my slide. So we have investment for every budget, from as little as $50 to as much as $150,000. Ladies and gentlemen, we have this share package of $150,000, which gives you 7,500,000 shares at a discount of 50 shares per dollar. Now, when this company goes public, the list price per share will be $1 per share, the least possible price. It therefore means that if you have bought the package of $150,000, those 7.5 million shares in your ownership will be worth $7,500,000 at IPO. IPO could be maybe the next 3 to 5 years or less. So it means that at IPO, you'll be making a whooping $7,350,000 as profit if you were to sell your shares at this point. Note that if the price per share is maybe $2 per share, you have already made times 2 of this amount. If the price is $3 per share, you've made times 3 of this amount, and so on. We have the package of $100,000, which gives you 4,800,000 shares at a discount of 48 shares per dollar. The least possible price of these shares at IPO is $4.8 million. It means that if you sell all your shares at IPO, you would have made a profit of $4,700,000. We have the package of $50,000, the package of $25,000, the package of $10,000. We have the package of $5,000, the package of $3,500, the package of $2,500, the package of $2,000, the package of $1,000, the package of $500, the package of $350, the package of $200, the package of $100, and the package of $50, which gives you 750 shares at a discount of 15 shares per dollar. The least possible price at IPO is $750, and the profit you will be making if you sold all your shares at this point is $700. So you can see that just by investing, even if you sold all your shares at IPO, you will still be making a significant profit from your investment. I think that it's a good idea to make a screenshot of this page. So if you are going to go through all of them later, you can just take a screenshot so that you can actually take your time to go through all of those packages and the potential profit per share on each of those packages. Now, that's not all the ways you can benefit from your Skyward community involvement. There's also the partnership program that helps you earn even without making investments. But this part involves attracting investors or making referrals. If you attract investors, you stand to earn 15% of the amount they invest as a direct commission. And you can equally earn indirect commissions up to 24 levels deep. Now, all that depends on your rank in the partnership program. And this could be earning you a fairly decent income paid into your bonus account. Like you see on the slide here, I have on my account about $1,121 in the bonus account, which I can invest or withdraw. And I have also $182 in the main account, which is meant for investment alone. And again, I have up to 1,049,625 shares, which at IPO will be worth $1,049,625. And I'm also paying for another 20,000 shares on the basis of installments. So I have that in my installment reserve. So the point is to accumulate as much shares as you can before IPO so that you can sell some and keep some to be earning dividends when they are declared. Because obviously the dividends will not be much at the startup. When the company is just maybe having like few projects from where they are earning profit, dividends will not be so much. But at least you can sell some shares and then have that money to make some other kinds of investment to help you get some kind of income up till when the dividends become sizable enough for you to live on. So if you want to live on your dividends, you want to target buying up to 1 million shares. Don't buy 100,000 shares and stop. Buy as much shares as you possibly can before IPO. Now is a very good time to buy because you have money in the bank that you cannot even withdraw to spend on your own self. But you can actually invest this money. You can transfer it directly into an investment where it will appreciate value for you rather than just sitting in the bank doing nothing and you can't even access it. So ladies and gentlemen, you should actually consider increasing or making an investment in Unitsky string technology. You can also use your Skyward community, like I use mine, as a dollar saving account. You know, if you don't have a dollar domiciliary account, you have an account with Skyward community, you can simply just save your dollar in there as a hedge against inflation. This is what I do because sometimes I buy dollar at the beginning of the year. Maybe dollar is trading at 480 naira, and at the end of the year, dollar is 750 naira. So imagine the amount of profit I have made just by buying dollar and keeping it in my Skyward community account. So this is something you can also consider doing. If you have a Skyward community account, you have some money and you want to save it as dollar, you can just put it there and let it stay and see what happens between that time and maybe the end of the year. So ladies and gentlemen, I'm going to take some frequently asked questions before we call tonight's presentation to a close. There were some videos we didn't see because there are no new participants in tonight's meeting. I can see that these are old faces. These are partners who are already into the business. So since there are no prospects, because people have refused to invite your prospects, we're just going to go straight to the frequently asked questions and call tonight's meeting to a close. So the first question we have here is, when can you expect your profit from investing in Unitsky string technology? According to this company's development stages, we have a 15-stage development plan, and currently we are in stage 14.3. It's expected that your investment should become profitable at stage 15.2. According to the company's 15-stage development plan. So you can read the document on the stages of development. It provides you further insight into that question. How much profit can you earn? This depends on two variables. The first is how much profit does the company make in a quarter, and how many shares do you have? So if the company makes a profit, they take 20% of that profit to pay dividends. If your amount of shares are very little, note that whatever is calculated as the earning per share multiplied by your number of shares is what is going to be your dividends. So if you want your dividends to be sizable, buy more shares. Simple. You can also profit from share price appreciation of the shares in the stock market, and as the company rises in value along with the growth of its assets, you can earn more money from selling your shares in the stock market. How much does it cost to invest in USD? Like we saw, it costs anywhere from $50 to $150,000. So there's an investment for every budget. There is even the opportunity to pay in installments for your preferred package. You can also invest without spending any money thanks to the SWC partnership program that allows you to invite investors and get commissions from their investments. Okay, to get started, get a link from a Skyward community partner. Use that link to create your account at no cost to you whatsoever. Verify the account. If you want, you can sign the partnership agreement, and with that account, you can invest by funding the account and making an investment, or you can attract partners by signing the partnership agreement and giving your link to potential investors. Okay, so that brings us to the end of tonight's presentation, and thank you all for staying with me. I'm going to close my slides now and take questions. So if you have any questions, maybe during the course of this presentation, you had one or two concerns that were raised in your mind, this will be a very good time to ask those questions. All right, so let's take questions. Let's take questions for the next 5 minutes, and then we'll call the meeting to a close.